Market Day Report. All right, welcome to a Thursday. We're glad you're with us. Overnight trade action. Let's go to the markets. Corn market in the red. December 441 and a quarter off 2 1/4. Let's hit soybeans. And what kind of trade did we see in the overnight action? Well, we extended the losses from yesterday, November at 1033 3/4, down 3 3/4 cents. What about the wheat market? Wheat moving higher yesterday and continuing that in the overnight session, up 531 1/4 for hard red, 3 cents higher, 528 1/4. And the market that led the wheat complex yesterday was spring wheat. December 2 1/4 higher, 634 3/4. Overnight action for the cotton market. Cotton has been down 2 consecutive sessions. Lower overnight, 67.89 off 21. All right, the president of Midwest Market Solutions is Brian Hoops. We start the morning. What are your thoughts?
Well, good morning, Tony. A couple of things come to mind in here, and this is something we haven't been able to talk about for the last several weeks, and we had some private export sales. Now, we did hear a few rumors that there was some cancellations of old crop corn, but apparently that turns out to be unfounded as we had sales this morning of old crop corn. About 104,000 metric tons sold to Mexico, and then 102,000 metric tons sold to an unknown destination. And both of those are for this current old crop marketing year. And our export sales have been slowing slightly for corn and soybeans here recently. But boy, they've been red hot for this old crop overall. And USDA is very likely still way too low on their corn export forecast. The next supply and demand report, we expect that they would increase exports once again, tightening old crop balance sheets even further. So this is a good sign here. The futures market has been kind of very weak. It was weak again overnight, really the downside leader of the grain complex. Hopefully this is enough to find it, to give it some support and bounce off of this level. The new crop, however, likely to stay under some pressure, and that's probably true for corn and soybeans because of good growing conditions. A little bit warmer temperatures is really what everyone is desiring right now. So you kind of have a market that corn and beans are I think are going to struggle on the new crop categories. Whereas wheat, especially the Minneapolis contract, probably needs to put in a little bit of premium. It seems maybe too cheap with some of the crop issues that we're having across the country with these low crop ratings. And even winter wheat, which was expected to improve last week, didn't improve. So we may see that market try and put in a little premium or at least stabilize its losses from the recent days.
Hey, Brian, you brought up exports. So I want to kind of put a pin in this and pause our conversation, but when we come back, pick that up with livestock. Market Day Report continues in a moment. All right, so we are watching for cash cattle this week. We already know the bids are out there, but we'll find out whether or not packers are able to get it done for steady money. Let's go to the markets. How we traded yesterday, it was in the red for the cattle market. August down $1.12 at 208.17. Feeder cattle yesterday lower as well, with the August at 295.62. That was off 252. And then the hog market yesterday moving higher. Hogs now have gained 2 consecutive sessions. July at 103.30, up 115. President Midwest Market Solutions is Brian Hoops. Brian, you mentioned exports in our first segment there. Looking at a USDA report earlier and looking at China and Hong Kong exports of pork from the U.S. there, surprisingly, it improved in the first quarter compared to the first quarter of 2024. That surprised me, but China's been back in the market.
Yeah, they have been. I think a lot of that was ahead of the tariffs being enacted. Of course, we had some pretty big news overnight as far as those tariffs go. But China was, really stockpiling up on pork products. Now, their second quarter, they're going to slow down quite a bit, but these targets kind of our tariffs are a moving target. And so we'll see how everything wants to play out. But China definitely needs to buy U.S. pork products. And that's one thing that I think we have some leverage on is that they have a need for our products. And hopefully we can use that to our advantage to regain some of that lost market share overall in our trade war with China. Now, there were no export sales reports this morning. That's delayed until tomorrow. And there's only been a handful of cash cattle trade developing. Yesterday, there was some in the Southern Plains at that 220 level. So again, steady with a week ago. June remains widely discount to the cash markets. In fact, a lot of the deferred contracts are holding record discounts for this time of year to the cash markets. Futures markets trying to anticipate when the market is going to top and things roll over, and they're anticipating that prices are going to be much cheaper by the fall and the winter months because of increased supplies. We really don't see any evidence those supplies are increasing to that extent. Now, maybe the consumer demand starts to slow down a little bit, but you look what's happening with the stock market. It's moving quite a bit higher in here. A lot of positive factors, probably more positive factors than any negative factors as far as our economy goes. If you look at the GDP, CPI, PPI numbers, they're all very positive with inflation starting to come down, gas prices coming down across the country. All this is a positive sign for the consumers, and maybe we're underestimating their amount that they will spend this summer during the grilling season.
Brian, great insight. Come see us back here tomorrow. Brian Hoops, Midwest Market Solutions.